Imagine this, a product that can't be touched or seen. Yet we all buy it, every single day. It's not a phone, not a car, not energy. This product is debt. Debt is the invisible engine of the modern world. More than a contract, it's a system. A system that creates wealth without producing anything tangible. And that wealth always flows upward. Debt is one of humanity's oldest inventions. Thousands of years ago in Mesopotamia, people carved their debts onto clay tablets. But back then, debt wasn't just a financial tool, it was a promise, a thread of trust holding society together. Yet our ancestors understood something profound. When too much debt accumulates, society collapses. So kings would declare debt jubilees, all debts erased, all people freed, because they knew unchecked debt enslaves. That same warning echoed through sacred texts. In the Torah, every 50 years, a jubilee year was decreed. Debts forgiven, slaves released, balance restored. It wasn't just a moral command, it was economic wisdom. Because across history, one pattern always returned. Debt makes the rich richer and the poor poorer. Time passed. In the Middle Ages, the church banned usury, charging interest. But merchants found a way around it. They disguised loans as trade contracts, and interest crept back into the system. From that loophole rose Europe's first banking dynasties, the Medici family of Florence. They owned no kingdoms, commanded no armies, yet they financed them all. Debt had evolved. It was no longer a promise, it was power. In the 17th century, debt took on a new form, state debt. The Dutch Republic financed its war of independence by selling bonds to its citizens. Ordinary people lent money to their government and earned interest in return. England soon copied the model. In 1694, the Bank of England was born. From that moment, kings no longer needed gold to wage war. They could borrow against the future. National debt became permanent, and the bankers who managed it became essential to state power. When the Industrial Revolution arrived, debt spread into every corner of society. Railroads, factories, and cities were built on credit. Workers labored in companies funded by loans, then borrowed themselves to buy homes, tools, and goods. Debt was no longer an elite tool. It had become a way of life. And that's when finance discovered its golden formula. Every person is a customer, every customer a debtor. After World War II, the world was rebuilt, but this time on a new foundation: debt. The Bretton Woods Agreement of 1944 created the IMF and the World Bank. The official goal: global development, the real goal: to manage debt. Now, even nations could borrow, but only under specific conditions. Through structural adjustment programs, the IMF dictated what countries could spend, privatize, or cut. Debt became a lever of global control. Meanwhile, in the West, a quieter revolution was taking place. Debt was repackaged and sold to ordinary citizens: home mortgages, car loans, credit cards. Consumption was no longer limited by income, but expanded by credit. Debt stopped being shameful. It became fashionable. If you owned a house, you probably had a mortgage, and that was normal. Buying the future was marketed as freedom. But behind the dream, every monthly payment was a silent transfer of wealth, from the many to the few. By the 1980s, debt had transformed again, this time into a commodity. Banks began bundling loans and selling them as securities. Debt itself became tradable. This process was called financialization. The economy shifted from making things to engineering credit. Every loan became an asset, every risk a profit opportunity. When the system collapsed in 2008, ordinary families lost their homes, and the very institutions that caused the crash were rescued. And the cure? More debt, lower interest rates, more borrowing. The addiction deepened. Today, total global debt exceeds $300 trillion, more than 3 times the world's annual economic output. Debt is no longer a bridge between crisis and recovery. It is the oxygen of the entire system. Without it, everything stops. But much of what we call growth is simply the future being sold to the present. What looks like prosperity is often just leverage stacked on leverage. Now, a new form of debt is emerging, the age of digital money. Central bank digital currencies, or CBDCs, will make money programmable, traceable, controllable. On the surface, it looks efficient. But history whispers another warning. Efficiency always favors the creditor. In the future, a loan approval could be made by an algorithm. Interest rates could adjust automatically. Debt will no longer be negotiated. It will be executed by code. Debt is humanity's most profitable invention, but also its most dangerous. It can build civilizations and destroy them. Real wealth isn't about borrowing more, but depending less. Every loan offer is a potential chain. Every interest payment, a flow of power. Throughout history, one truth remains constant. Debt builds empires. But in the end, it also brings them down. Debt is the invisible empire of humankind, and to dismantle it, we must first understand it. The Modern Economy Manifesto.